Now, we're going to be talking about several things here today, but the primary objective is to really identify what is considered an early distribution. Most people know that early distributions are taken before age 59 and a half, but there are some exceptions to that. We're going to look at the penalties that could apply and some of the traps that people fall into because they are unwary of the type of transactions that could result in the early distribution penalty. And we're going to look at some of the exceptions that apply. So, the idea is if you're having a conversation with a client who wants to take what is referred to as an early distribution or has already taken an early distribution, is there something you could do to either make the client aware that the penalty will apply and if possible, help the client avoid being subject to the 10% early distribution penalty. So let's first talk about the general rules that apply to distributions from IRAs. I've seen so many cases where people make withdrawals and don't understand the tax impact. I got to tell you, my son just started a new job, and he received a whole bunch of paperwork from his previous employer, and of course that paperwork includes the balance that is in his 401k and pension account and the distribution options that he has available to him. And this is where, as they say, a little knowledge is dangerous, because some of his friends are telling him, oh, you can take the funds and that new car that you have your eye on, why don't you use that money to buy that new car? It's your money. You can do whatever you want with it, which is true. But he had the common sense to come to me because he knows that this is the area that I practice in. And he did understand that if he took the money out, he would pay income tax on it. So when he came to me, he had the numbers laid out. This is the amount of income tax I'm going to owe. And I said to him, what about the 10% early distribution penalty? He had no idea what I was talking about. Now, this is someone with some sort of financial background, and he had no idea about the 10% early distribution penalty, and he's not alone. I find that even some tax professionals are telling me that when they sit with the clients and they're doing the tax return, transferring the information from the 1099-R to the 1040, most of these clients are surprised that there's a 10% additional tax on the distributions that they take before they reach age 59 and a half. So when you're meeting with clients and they're filling out that distribution form, not only do you want to remind them that any pre-tax amount is going to be subject to ordinary income, but if the distribution occurs before they reach age 59 and a half, there will be a 10% additional tax unless they qualify for an exception.